Happy VA Wednesday. So today I'm going to talk about 3 reasons I love VA loans. And guys, I haven't even mapped this out, so this could be real interesting. First of all, if you like the channel, hit like. If you hate me, hit hate. Drop a comment, let me know you're alive. If you guys watch the channel, you know every single Wednesday I do a VA video. My team is one of the top VA teams in the country, and that's because we love helping you guys. Okay, that was my shameless pitch. 3 reasons. Number 1, 0 down. Seriously. Who doesn't love a 0 down loan? So most of the time when we're talking about a 0 down loan with lending, it is red flag town, meaning that there's something wrong or it's gonna be expensive or you're getting ripped off with rate. You know, most of the programs where they're like, no money down, it's like a red flag. VA, it's legit 0% down, there's no mortgage insurance, and the rates are not higher. The rates are actually lower than if you were doing a conventional mortgage. The reason this is a 0% down with no red flag bullshit, excuse my language, is because the government's insuring a portion of the loan, and this is how this loan was designed as a benefit for you, thanking you for your service, okay? Number 1. Number 2. I know, I covered so much in number 1 that number 2 is going to be tough. Underwriting guidelines. I actually really like VA underwriting guidelines. So they're more lenient in terms of debt to income, which can be really helpful because sometimes you'll have a situation where, like, let's say for instance, you know, especially like if you guys are PCSing, you know, we may just be using your income, but your spouse's income, you know, maybe they have a great job in Tennessee, but they've got to get a new job in Ohio, but you know they're going to get a job, but they don't have one yet. With VA, I can go up higher in debt to income than I can with conventional, which can be really beneficial for situations like that. The other thing I like about the underwriting guidelines is I like the residual income calculation. So VA is the only loan that has this calculation in it, and it's basically a safeguard for you guys. So what it looks at, so VA is the only loan that actually looks at if you have daycare expenses, which I think is brilliant, and it's taking into consideration those daycare expenses to make sure that you don't end up overextended. So even though it will let the debt to income go higher, it's also doing an overview of your whole financial situation, taking into account taxes, you know, other things that you pay, like your credit cards, all that stuff, which we would normally do as well, the square footage of the house you're buying, what the projected maintenance is, and it's making sure you don't get overextended. So even though the debt to income can go higher, we have this safeguard to make sure that at the end of the month, you should have enough money for yourself and if you have any dependents. I really like that. And circling back on the daycare is such a huge expense. Like, it doesn't even matter what state you're in. I was talking to Tegan on my team, and she's in Indiana, and I'm like, okay, how much is daycare gonna be? She's like, Jen, it's $1,600 a month. That's for one kid, guys. $1,600 a month. I'm like, is that a private nanny? She's like, no, that's daycare. So daycare is a huge expense that most loans don't look at. So if a lender max qualifies you, meaning that they push you to the maximum you can with FHA or conventional, and you have daycare, you are gonna be broke as a joke. It's not a good thing. So really like that about the underwriting. I also like that the underwriters are on the veteran side. So if it's a make sense situation, we can often do it. And with conventional FHA, it's a little bit tighter, but with VA, in some circumstances, we can say, okay, here's what happened, here's what we can do. This is, you know, the chain of events, and sometimes get loans through that otherwise would be declined, okay? Number 3, I love that you can do multiple VA loans. I do. And I like the whole investment angle too. Let me be very clear though. VA is owner-occupied loans. So when I say investment, I mean, I'm thinking about 2 different types of VA buyers. I'm thinking of the person who is buying a home at a station, and then they get PCS'd, they turn that one into a rental, and they buy another one with VA. Depending on where you're being stationed and the cost of these homes, I've seen some veterans with as many as 4 VA loans at a given time. Yeah. Now look, are they getting all 4 at the same time? No. They buy a house, they live in it for at least a year. You know, if they're active duty, they're gonna be there about 3 years, right? Then they move to the next station, turn that one into a rental, buy one, live there, same thing, rinse and repeat. Okay, I really like that because then when you get out of the military, you have this real estate portfolio that's working for you. And, you know, I was watching this Dave Ramsey video from like years ago, and it was so wrong because he was saying, you know, yeah, you really don't want to buy in military towns. And I was like, Yeah, you do. Because here's the thing. We all know military is always going to be there. There's a lot of people who are going to rent, and you can actually go to the military if they don't pay the rent. Seriously, someone told me that. Someone verify that quick. So we hear that a lot. We hear about a lot of veterans who have houses that they've bought in military towns. You know, they're constantly providing income because there's that guaranteed employment in the area. So love that, because when you get out, you know, whether you stay in for 20, 22 years and you end up with a pension, you're still gonna need extra income. Like, that's just, everything's so expensive these days. Thinking about that long-term is great. Okay, from the investment side, the other thing I like is I like the ability to purchase a multi-unit with 0% down. That's right. The trick with multi-units, guys, is that unless you have a landlord history and a stack of cash in your bank, we're gonna have to use your income to qualify for the whole loan amount, okay? If you have landlord experience and 6 months of reserves, then I can use projected rental income from the other units. But if you qualify for the whole loan on yourself, 4 units, 0 down. There's nothing like it, you know? And to get your foot in the door as a first-time home buyer, it's wild. So I really like that as well. I'm sitting here going, oh my God, there's so many more things I like about VA. But overall, here's what you guys need to know. It's a great loan. If you guys are talking to a lender or a real estate agent that's saying, oh, VA is not good, they just don't know it. They're so, oh God, I'm gonna do another one. I'm gonna do 3 more things that I like about VA loans, because I've got 3 more really good ones. But look, if you guys have VA questions, I've got a calendar in the link. You can book a time, it's free, guys. Alyssa and Sandy on my team, they're both licensed. They'll both answer any of your questions that you guys have about VA loans. We're happy to get you pre-approved. We waive our lender fee on all VA loans, and clearly I really like them. So stay tuned next week for 3 more things that I like about VA loans. Thanks for watching, guys.